Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, August 6th, 2019. So here's the S&P, folks. The S&P is bouncing back a little bit, but in all fairness, there is more downside to go, whether it's tomorrow or next week. We'll see. But ultimately, you haven't hit the key level of the 200 moving average here on the S&P. Now, could we float higher for a few days, maybe even going back to this gap fill in the 50 MA before that move comes in? It's very, very possible. But I want you to understand that this was not a flash in the bucket type thing. There's more downside, whether, again, it comes after a little bit of a bounce here or immediately, we will find out. Now, having said that, I have some stocks that I have on my radar that I want you guys to be following very, very closely. First off, let's take a look at the semiconductors. So I have a buy level on the semis where I'm going to get some SMH, or maybe I'll buy the triple ETF for the SMH. We'll see. But notice the 200 moving average is here, but I'll start my position before then on this just below 106. So look at the pivot point right here. This is called a gap fill. It is a major support level. SMH today up $1.32 on a small bounce, but look at that fall on this. I mean, just an amazing fall. But this level is where I start to buy. I'll probably buy a half position there, and if it flushes to the 200, I'll buy my other half. So this way I get some exposure if it just immediately bounces, but if it goes lower and tags the 200, it gives me an opportunity to average in with my second half. Then I get a nice average around 104 and can wait for the big bounce back. And once you achieve this bottom area, either here or here, there's going to be a dramatic snapback back to here. This is my target, folks, back to about 113. So think about that. You're talking about if you have an average of 104 on the SMH, you're going to get a snapback probably within a week or two back to 113. That's a $9 pop, almost a 10% move on the SMH, probably again in a week or two. So really intriguing, but I'm still sitting on the sidelines on the SMH until this level is tagged. And again, the question is, does it get tagged tomorrow, Friday, Monday of next week, or a week later? We'll find out. All right, one other stock that I like on the long side, and there's not many that I like on the long side until they get lower, but one thing caught my eye yesterday was Bed Bath Beyond, folks. I actually have a position in this. Look at the bottoming tail yesterday. So you have a clear-cut bottoming tail right here yesterday. Today you're seeing a classic retrace. So usually after a bottoming tail, you'll get a retrace back down because basically what happens, a bottoming tail forms by panicked sellers flushing it out, and then buyers swoop back in and push the stock back up because they're buying it up. Usually institutions do this, and that's why you see the tail, because institutions have a lot of money, a lot of volume. They buy a lot of shares. Now, the next day, those still panicked kind of sellers are like, oh man, I'm still nervous, so they sell it back down. As long as it doesn't close below that bottoming tail low, this bottoming tail is purely intact, and this is a classic retrace of that bottoming tail, which is very, very common. What you're looking for is a move up here. Now, what made me so impressed with the Bed Bath Beyond bottoming tail yesterday is that this basically rallied back throughout the course of yesterday, even when the Dow was down on the day 750 plus points. Well, you had the NASDAQ down a couple hundred points yesterday, and you put in basically a flat day, a reversal day on Bed Bath Beyond. Now, obviously, the stock has been in an insane downtrend for quite some time, but when you see that on a weekday, I mean, it's one thing if the markets flushed and rallied all the way back by the end of the day, but they didn't yesterday. I mean, we had the biggest sell-off of the year yesterday. So for Bed Bath Beyond to see that type of buying interest, that gets my attention. It's almost like watching the options market and seeing a huge, $10 million, buying of some sort of calls that expire a month out or 2 months out. I mean, it gets your attention. Absolutely. So keep an eye on Bed Bath Beyond here. Again, the key is you don't want to see it close below the bottoming tail low of yesterday. If that happens, then it's negated. As long as that holds, you're in good shape here. Okay. Um, Going to a couple other things, I have to keep my eye on Mylan here. So Mylan, I did pick up some calls today down here with the Options Alerts members. And the reason I did that, folks, is because you had major support right here tagged. But just a week ago, this stock gapped higher when Pfizer said they were going to combine its generic drug portion of their company with Mylan, essentially a merger. And the stock jumped up to $22 and change here. So to see it back down below 18 with that news still out there, to me represents an opportunity. And an opportunity with chart support is an opportunity I couldn't pass up. So sure enough, guys, again, I got in on this, and I'm in on some calls on Mylan off of this support level. I think it trades back up to at least $20, maybe higher if the market can turn around and start getting stronger again. But either way, this is a really interesting setup. All right, so that's where we stand right now, folks. I just want to make a point here is that yesterday we had more wins in the research center and the options alerts than I think any time this year. We were set up perfectly for the decline, and it was an amazing drop in the markets, but we had shorts out there. I want to show you our website real quick here, folks. Let me just get it kind of in focus. Bear with me. But here's inthemoneystocks.com, my website. And if you want to get involved, the research center is right here. The options alerts are right here. The intraday stock chat, where we had 5 wins, over 7,000 in profits till yesterday alone, right there. And if you want to see the track record for the research center, it's right underneath free market action. And all you have to do is go there, click on track record, and it's fully been updated. And take a look at this, guys. Look at this. Look at this return now for the year. And again, that's if you put all your money in every play, which we don't recommend. Again, you should probably be doing about between, let's say 10% in each play. Generally, we recommend 10% for large caps and single ETFs. But I mean, just look at the win rate here. I mean, it's just incredible. Look at all the green, and there's going to be a few losers here, but notice again they're pretty minor. 0.1%. That was basically a flat. 1.6, 3%. And then you look at some of the gains: 7%, 10%, 4, 4, 5, 5, 5, 8, 13, 10, 10, 11. And just up. Here's 18% on Tilray we made on this, and going all the way is 27% on APRN, 10% here, 5%, 7%, 14%. I mean, it goes on and on, folks. But bottom line is, I mean, look at all the trades that we've done this year. These are all swing trades. These aren't day trades. These are all just swing trades in the research center. And again, look at this. Again, this is my bread and butter. I love swing trading. I mean, finding opportunities, setting yourself up for the next market cycle move. And again, that's what it is. And you can go back to past years just by scrolling out. But we're on pace here to do incredible moves. I mean, let's just say 10% in each position, you're up over 40% for the year. And again, the best hedge funds in the world today are up maybe 6% for the year. I mean, we're just knocking it out of the park. Even if you were in the S&P, I think the S&P is only up like 12% now on the year. And here we are, conservatively up 40%. So I do encourage you to come get involved. Take the 7-day free trial until we launch the new website. Then no more 7-day free trial. So this is your chance to do it. Check us out and obviously make money with us. I mean, it's pretty clear that even no offense, but even an idiot. I mean, you could be the biggest idiot in the world, and there's really no way that you've lost money this year. I mean, no way. I mean, if you lost money, then you closed your eyes and didn't look at any of the alerts that we put out, which are time-stamped. We email the alerts out and so forth, so you get them right to your phone and so forth. So, yeah, I mean, it's pretty outstanding. All right, we'll see you soon, guys. Have a great one. Take care.